Hi, thank you for listening to Rivers Investment Channel. I'm Chi Yao. Today, we will continue with the topic Fake News, Fake Markets. There is no free market. Currency printing dictates how market behaves. The price of a security deviates from how much value it creates. Instead, the price is determined by the ease of access to currency. It has nothing to do with revenue, income, balance sheet, or cash flow. As long as more currency gets poured in, the market can always reach another record high. Caterpillar posted a 48 consecutive month of declining sales, which surpasses the 19 consecutive months during the Great Recession. What is disconnected from the reality is the stock price is still moving higher and higher, and that's okay. Let's look at the bigger picture. Despite of the pickup in the understated consumer price index, S&P 500 experienced the seventh consecutive quarterly revenue decline, but that's okay. S&P 500 reached one after one record high, and Dow Jones Industrial Average is currently flirting with 20,000. The price ratio is fast surpassing the pre-depression level and reaching the 2000 dot-com level. Currency printing can never create prosperity. The wealth is again transferred from the bottom to the top. If the wealth is transferred from the bottom 95%, who is left to support the revenue? The credit currency creates debt-based bubble and undermines the system. We have a failed market system that prevents competition. Currency printing, taxation, and regulation make sure the currency flows from the bottom to the top and stay at the top. Governments and central banks together cooperate with elites to create an environment making new competition impossible from the rising costs and risk, while the elite class assume no risk and socialize the loss with the public. When this bubble bursts, there will be another round of QEs, bailouts, and bail-ins to make sure the bottom can never accumulate enough wealth to compete and thus stay obedient and naive. There is no free market. Computer trading now composites more than 90% of traded volume. The high-frequency trading is programmed to act without human evaluation. This computer acts without the consideration of valuation of the market, as the HFT use highly similar data inputs, if not the same. They all share the great similarity, meaning if certain market activity occurs, they will act to move the market in the same direction. And how do we judge if the market won't go any higher or lower? If you're a day trader, think yourself as the 10% with 90% working collaboratively against you. If you're not betting with the 90% computer trading, how can you ever possibly make profits? The computer algorithm gets triggered instantaneously, providing with faster internet speed, closer location to exchanges. These computers are programmed with the goal to take every single fraction of penny profits based on your trade. They are like piranhas, waiting for your flash to dip into the water. The HFT provides no liquidity and price discovery, but distortion and deviation from the value. They are simply reacting to tear your trade, and that's why you shouldn't day trade. If you don't have the deep knowledge of what you are doing, the chance of winning the bet in the long run is slim. You can call the market a fraud, a scam all you want, but you must wake up and realize the market is unfair and the odds are against you. To wrap it up, if you can't value an investment, you are speculating. Embrace the free market and save money. Thank you for listening to Rivers Investment Channel. This is Chiao, signing out for now.